Hi there, I'm Ben Crawford, here today to present the first in a new series of recorded sessions with people from across the used car industry. We'll be talking about what's happening with the industry, how it's changed during the pandemic, and what the future holds. I'll be inviting on guests, including people from Aston Barclay, its customers, and people we think you'd like to hear from. Today I'm joined by Martin Potter, Managing Director Customer at Aston Barclay, and Chris Wiseman, Managing Director of Wessex Garages. Welcome both.
Hi. Morning.
It's our first podcast of 2022. How has your Christmas break been, Chris?
Probably too long, if I'm honest about it. It's we shut down on Christmas Eve. Before Christmas Eve, gave people 5 days off, and then you had the New Year break. And there's always a bit of a hangover on the New Year, getting back to work. But I think we've seen last week is the first real full week of some decent sales coming in. So no, it's the break was good. It was well earned after last year's trading conditions, but it's back into seeing what 2022 holds for us now. And
so you just had a fairly strong start then to 2022.
Yep, order bank is exceptionally good. I'm pleased to say, and it looks like, say, the last week's trading was very positive. So yeah, looking forward to a strong January and the end of this is our quarter 4 of our fiscal year. We finish in the end of March, so it looks like we could have a strong end to our fiscal year as well.
Good. And so looking back then to 2021, from a retailer's perspective, it was not quite a normal year post-pandemic. We're still dealing with some of the lockdowns. How was it for you and for Wessex?
Yeah, I think we're not allowed to use the word unprecedented anymore, are we? I think it's been worn out, that word. Challenging, certainly. Been very interesting to see what's happened with the brand. It's been a very brand-specific year. We're fortunate in the brands that we represent, Kia, Hyundai, Mazda and Nissan, but certainly with the Korean brands in the main. I wouldn't say they've been unaffected, but they've been affected a lot less than some of the German brands and some of the Japanese brands. I think it was a clear distinction. When you got into September, you could see German brands down anything up to 60%, Japanese brands down anything up to 40%. And the winners were the Korean brands, certainly Kia and Hyundai, great. MG was up there as well, which we don't represent, but an indication of perhaps some of the Chinese brands and what they can do in the future.
And so Wessex as a company then did relatively well just because of the brands it was associated. Did you have to trading a different way last year at all?
Yeah, I think I've looked at this quite a lot. At the end of last year, I started looking at my 2-year tenure as Managing Director. And we've changed an awful lot in the business. We've changed our lead management system. We've built an online department, which we didn't have before, the online navigator team. We've changed our showroom system. We've dealt with F&I legislation that's changed. We've changed our insurance and product suppliers. And I look back at a whole raft of changes and improvements we've made in the business. And I'm not going to say any individual one of those has contributed. They've all contributed a bit, and if they can all move the dial of a few percent, then I think that's helped. I think it helped that we were in a good place structurally in the company structure to deal with the changes when they came, and we planned. And I think the difference between those companies that are going to be successful and had a successful year and to those that aren't are the ones that took some really strong actions and planned a way out of it, took decisions. Whereas if you sat and waited, I've said this quite a few times, if you sit and wait for somebody to come along and tell you what to do, you've missed the point then. You've already missed the opportunity. So we planned, made a lot of strategic decisions. The online team came on board, has been on board now for 18 months. And without a doubt, that's proved to be very, very successful. But I say, no one thing, but I think we haven't suddenly become the best used car retailer overnight, and the market's helped us do that, and the brands have certainly helped us with the new car market.
Well, I was going to come on to the used car thing, because I would guess during last year you've had to rely more heavily on the used car side of the business than perhaps the new car side of things.
We've had to change our model quite a lot, and interestingly, I was talking about it this morning, where we will have a bit of a problem in the next 12 to 18 months of a lack of 1 to 3 year old stock. And as a main dealer, most main dealers, that's bread and butter to them. That's their core stock. So our stock profile has changed considerably. It's got older, as you'd expect. So we're dealing in a market that perhaps we weren't necessarily dealing in before. So we've changed our style, if you like, or had to upskill on older cars, trading on older cars. So that's one thing. But secondly, stock mix, certainly dealing with a lot of non-franchise. But then you end up going out, if you're in that non-franchise world, you're then normally paying a bit of a premium for it. And then you're also in the auto trader world of marketing, where you are, if you're not careful, dealing on price. Fortunately, the market's held up, so the pricing hasn't has become as important. We're virtually double on our used car margins to where we were in normal trading conditions. So the trick will be trying to hang on to that as we go through 2022, really.
And Martin, from your perspective, what do you see happening to the used car prices? Because we keep saying this is the highest we've ever seen, and it continues to climb. Do you think we're reaching that plateau?
Yeah, I think we've. Yeah, it's interesting. We had a little bit of dip in wholesale prices in the used market November, December, but that was honestly just the first ever seasonal dip we've had for some time. And I think that was genuinely because most consumers hadn't had a Christmas last year, and they were really keen to make sure they did this year. And already the first week of January has seen prices increasing slightly. I don't think the market will do what it did last year, where we had several consecutive months of prices going up by sort of 6.5%. But I do think the situation hasn't changed that much in terms of new car supply is still really difficult or suppressed. And it's interesting to hear Chris, because that's obviously specifically manufacturer-led in lots of cases. But as Chris just said there, a lot of the European manufacturers are definitely, the news is that they won't be back to 100% production until probably Q3 this year, and I think that's at best, and then they've got to work through the backlog as well, and I think they'll obviously have some priorities there, so they'll be wanting to satisfy their retail networks first, then they'll work through the backlog of sort of fleet orders, which are large, and then obviously you get round to eventually maybe the rental market, so I think that's going to take quite some time. So for me, yeah, I see there's some good, strong markets in the used world. I do not see pricing dropping off and going right back to pre-pandemic levels, because the supply and demand situation is still going to be in exactly the same position, where there's a limited supply and a really good demand. So I think the used car market's got some strength in it. And I actually think if we run through to the end of this year, I think we're already then into actually, and I'm normally not this brave, I normally just sort of predict 3 months ahead, but I actually think the used car market's got some strength in it now for the next couple of 3 years, actually, because we've had two or 3 years already now with reduced new car registrations, and therefore we're almost back. By the time we get to the end of this year, we'll be back around a three-year cycle. And actually, you're just then, when manufacturers are not going to all of a sudden be able to work 24/7 and double production, etc., to work through the backlog. It's going to take a time. And therefore, I think that's good for the used car market in lots of ways, because we won't have these big peaks and troughs of volume. And yeah, I think the outlook looks really strong.
Yeah, we're certainly seeing our style of trading on new cars has changed. We represent volume brands, but we're now into an order take situation whereby we are ordering the cars for the customer. We don't have the stock, we don't have the supply that we can just pull down that amount of choice on it. So customers need to understand in this market, if whatever car they want, they're booking a place in the queue to build it, which they've never done before with our brands. Certainly different to some of the prestige brands out there, but with our brands, that's a new style of trading. And I agree, because of that, you'll see, I think there'll be gradual price increases, not to the extent we saw in the last 6 months of last year. You'll see gradual price increases, values for used cars. Certainly that cliff edge drop won't come. And if it does, we'll certainly get plenty of warning before it comes. We'll be able to predict that, hopefully, and we can align it sensibly. And the other thing is, whilst the semiconductors created problems, there's also logistical problems that still exist in the business. There's also raw material problems as well that are being masked by the overall badge of semiconductors. So I'm not sure that we've quite seen the knock-on effect of some of the other supply problems, component problems in the industry yet. And of course, new cars are becoming more expensive. So as as there are inevitable price rises, particularly with the mix of EVs, which are, as we know, more expensive anyway to produce and have been probably artificially suppressed at the moment. But as those new car prices go up, obviously that helps stabilise used car prices as well. And yeah, as I say, the knock-on effect of having a shortage of good 1 to 3 year old stock, that will remain with us until those fleets start to turn over product a bit more and manufacturer supply comes online. And that won't be, certainly I'm thinking Q4 next year.
Yeah. Chris, you said there just the 2 years that you've been in your tenure as MD, they sound amazing in terms of all the changes that you brought in. Has that sort of changed the way that the business is actually being run at sort of the sales level, with all the different ways, with the online coming in and obviously with the change in new car supply and stuff? Has that changed the way that you do things dramatically?
I think it's changed every company dramatically. I think anybody would be crazy not to think that they had to make changes. Certainly, the cost base is one. We've changed the way that we look at certain elements of our cost base, our expense base. Some of that is people orientated. We had over 300 staff pre-COVID. We've probably got to 80 at this point in time, and that's as well as putting into place the online team, which is 6 people in online at the moment, that are helping to create a totally blended approach to online trading. So I've believed for many years it's not just going to be all online or showroom. I think customers now dictate far more to us what and how we're going to transact with them, and our job is to get to that customer quite early on, qualify them in a slightly different way. My way is, how are you looking to buy your car today? And that raises a question, what do you mean? And it's, well, do you want to buy it online without touching a showroom, or do you want us to book an appointment? Do you want us to do a demo to your door? Do you want us to make an appointment with a sales exec for you this afternoon, tomorrow? How would you like to transact with us? And that's a far, the word blended approach, omnichannel, I think is the buzzword, but that's a far better way of looking at it, in my opinion, than it's all online or it's not. Obviously, there are online disruptors out there. We're not in that market. I don't profess to be in that market. We will sell cars to Scotland, and we'll charge customers to deliver them to Scotland if that's the way they want to transact. But I'm not out to deliver cars all over the country. We are a regional, South West, South Wales dealer group. We want to sell cars to people that are 40, 50 miles away, do a really good job of it, service those cars and keep supplying it. So some of our core values haven't changed, but the way that we do things, certainly, in the last 2 years has changed. Some of it have been thoughts that I've wanted to put into place for quite a few years, and I'm 22 years in with the business, and some of them are forced by the market. So there's lots of different reasons for doing things, and as I said, it's all incremental. When I took over, I just thought I'd have to deal with Brexit, and that would be it. But that turned out to be not the case.
It's come and gone by without much news, isn't it, in the end of the day? And it's interesting you say that. I don't know if you've got any numbers that are in percentage terms, Chris, that I remember listening to a podcast with Robert Forrester on, and sort of saying about when we were right in that situation where the dealerships weren't even open, just sort of around that period of time, and saying that actually even then a true online transaction where it was literally purely online, never touched the showroom, was still very rare in actual fact. And I think obviously having the infrastructure and the strength still of having the online capability that you've now put into the business, but also having your infrastructure, I think gives people like yourselves a real strength versus just only having one of those options. How have customers generally still wanted to trade with you, being given those options? Are they still looking for that customer experience through your showrooms?
I think you can't get away from the fact that the car is still the second biggest purchase you're going to make. It's still so, you want to touch it, you want to feel it, you really want to get involved in that whole purchase. I think we are probably I could be wrong, but a couple of generations away from those people that want a car purely as a utility, and then you're into a different model, a subscription model, and we can talk about that in a moment. But in September, when we were closed, we delivered 840 cars, I think, in the month across the group. And I looked back and thought none of those customers either saw or touched those cars until the point of delivery. They were true distance selling. We didn't shy away from it. We didn't try and find a way around it. We embraced distance selling, because we were quite open about the way we transacted and said if it's not right, 2 weeks to test drive it really and bring it back if you don't. And we have very, very few cars returned to us. I mean, we're talking about a handful in the 2 years that we've traded with distance selling. That could be process, that could be the brand, but certainly it could be reputation as well. I think without all of those things in place, the online selling becomes very difficult. The online selling to somebody that's faceless is a much different proposition to an online transaction with a dealer that has been there for 35 years and has a reputation in your local area. And I think that's a strength. That to us is exactly reputation, the strength of the name and the strength of the brand, and then put your process and your people around that. That gives you the win. I think that's what will put us in a different arena to some of the disruptors that are out there. Their view of the brand and reputation is, as we've seen, throw an awful lot of money at it and build a name that way. But that still takes a bit of time to do that. Yep. And I think we're in a better position. I think any dealer group, any dealer that's out there that's been around for a while, that's the strength. You can't get away from that. I think that's a real win.
It's that use of the word omnichannel, isn't it? Whilst you can do the distance selling model, you've still got bricks and mortar here where people, if they want to come and see you, they can come and see you, can't they? And you've got the service offering and, all the stuff that goes with a traditional dealership. And
at some point, they are going to want to come back and service their car, and they are going to hopefully, if there's a problem, be able to speak to somebody and get it resolved straight away. And I think when you're spending the sort of money, and that's only going to get more and more expensive with EVs and technology, then unless you are just looking for a car to go to A to B and you're not worried about spec and you're not worried about size and you haven't got to fit a certain need, maybe if you're one brand, one car, Nissan Qashqai is a good example, tremendously loyal customers will always have another Qashqai, maybe those people will look more comfortably at an online transaction. They'll still look at reputation, they'll still look at transacting online with you, one would hope, or certainly give us the opportunity. We've still not taken for granted. We've still got to deal with them the right way. We've still got to have the right offerings. We've still got to have the right deals out there. But those customers are more likely to just take an online transaction. I still think it's so important that we have facilities that we can service that customer in every way that they want, whether it be, we can transact between 8 in the morning and 9 at night with an online team. And in the middle, the showrooms are open. So yes. To a customer, that should be the best of every world. And we just need to make sure that we keep an eye on that market. And if that market shifts, then accordingly we do the same thing. But our brands aren't looking at pure online modelling at the moment, which is good. And hopefully not looking at agency models either. So,
no. Yeah, has that. That's one thing. I know there was we said a couple of weeks ago, just before we broke up at Christmas, about maybe the agency model argument would come back with the vengeance in the new year, just because it had gone a little bit quiet. And obviously, again, some manufacturers have forged forward with that idea, but it does seem that a number are not going to go down that road, which is interesting, I think, Chris, isn't it?
I think we're not involved with brands that are specifically looking at agency, which I'm delighted with. I don't, as an individual, immediately understand the complexity of it. I can see where the manufacturers may fall down on it. It might look like a good idea to start with, but you think most medium-sized dealer groups probably employ more staff than the manufacturer does, certainly in the UK. And then you look at the number of staff that we need to deal with the complexities of transactions, whether that be through supply, servicing, or dealing with customer complaints or customer issues. And then you hand a lot of that responsibility, which is, all of the responsibility for the sale, goes back to the manufacturer. that they have to deal with that. And it brings into question, how do you deal with a part exchange, which is a huge revenue stream for the business. So if we lost that revenue stream, if we lost the ability to fund vehicles, to use add-on products, you're not left with a lot in the dealership, are you? Other than a few ramps to service a car. That changes the model totally. It also begs the question of those brands that have asked to be heavily invested in over the last few years. What level of compensation is available to those companies that need a return on that investment? So I think we're a long way away in the UK, at least, to seeing an agency model come to fruition. Clearly, there are Stellantis is ahead of the game. We as in our business as Wessex Garages don't represent any of those brands, but they are represented within our wider group of VT Holdings. So it'll be interesting to see how that plan plays out, really. But fortunately, not a field I'm playing in at the moment.
No. Well, and as you just said, the biggest thing there that would be missing in that environment would be that reputation thing, wouldn't it? You got to, as a manufacturer, you got to build that reputation up again, that you're actually providing for that customer, which, by the sound of it's a large element of their buying decision.
And I think it's the area that the manufacturer is probably least in touch with, because they're not connected at the ground level. They're not dealing with the customers face to face. They're not dealing with the various individual foibles that customers have and individual demands that a customer has. They're not geared up for it. But also expecting a customer to understand the difference on an agency agreement as well is totally different, because ultimately they will expect the dealer to take full responsibility for that transaction, and they won't understand, no matter how much you explain to them, that their contract isn't with us anymore.
No.
Because they always see it with us. And even now the manufacturer sees that as so if there is an issue with any degree of severity with a car that needs to be taken back, most manufacturers don't like doing that, and it's a last resort. And I think they undercall the amount of times that the dealer will prevent that from happening because of the relationship with the customer. And I think if the customer's dealing with maybe faceless communication with a brand, that they will take a different view on it, and that may create even more problems for the manufacturer. So early days, it'll be interesting to see how it pans out, certainly with Stellantis.
And so on the subject of how people buy vehicles, you mentioned earlier about the subscription model. What are your thoughts on that? Do you think that is it going to gain traction? Is the market for it? Are people ready for it just yet?
Very small cases, I think it might suit. I don't think it's for everything. Certainly the costs don't look to be, they don't seem to pan out at the moment, but you can see the big players in the market are moving towards preparing for a bigger slice of that market. Subscription is a very individual thing. I mean, but to all intents and purposes, a PCP is a 3-year subscription. Okay, it may not include insurance and it may not include running costs, but any finance agreement is virtually a subscription model, but you own the vehicle. The likes of Kazoo with Drover is a good example of somebody that's preparing for that kind of market. The ALD lease plan merger or acquisition, which surprises me that Constellation's, their parent company, sold it. I mean, it seems to be would have been a good supply of used cars for them, but for whatever reason they've made a huge company now with ALD and lease plan. That's certainly gearing up for that model. You can see it. In a city, infrequent use, maybe more of an opportunity for that for a period of time until our inner cities become totally traffic free. Yeah, which is happening to degrees all over the country, and Bristol being one of those, earmarked for a clean air zone, and more so in London now. So I think there'll be a place for it. I don't think it's not going to replace traditional retailing. I think it will be a long time, certainly a long time after I'm gone, until we see the traditional model change to any degree, which I'm pleased to say that there is still a place for us. This model's been around for an awful long time now, and I think there's a reason it's been around for a long time. Not to say that it hasn't needed to change, and I think as an industry we talk, and lots of people talk about agility and being flexible, and I think as an industry, wow, have we proved that we can do that over the last 2 years, more so than probably a lot of other industries. We've been allowed to do it, and like hospitality, but we've been allowed to make changes and trade, and we've done it successfully, as of lots of businesses. So I think the industry will continue to evolve. It will continue to change, and maybe subscription becomes part of the dealer transaction as another facility. Will it become the be-all and end-all? No, I don't think it will. Certainly not in my lifetime. But there's obviously an element of demand out there for it.
Cool. So we're here today in Bristol, in your Wessex Garages HQ. And as I drove into the car park this morning, I noticed there's a sizable portion of electric vehicles that are all parked up there, along with the traditional ICE vehicles. What's your split looking like, and how is that changing over time? We've heard in the news that the manufacturers are beginning to prioritise BE vehicles over diesel and petrol ones. How are you finding that panning out?
We're delighted with the increase of EV sales. I've got to say, the brands that we are representing, the three main brands, Nissan, Kia and Hyundai, have been superb in their product offerings on EV. Nissan as the first to real market with the Leaf, which is now probably 12 years old, really forced the market, that car. And now with the technology and the product offering that we've got from the Korean brands, it is absolutely superb. I mean, we have most of the EVs you saw would have been staff or management cars. We probably run 30 to 40 EVs around the group. We've got new product all the time. We've got Ioniq 5, which is, I think, car of the year last year. We've got EV6 from Kia, which is absolutely superb. I've driven EV for 2 years. I wouldn't move out of EV now. Okay, we're fortunate. We can charge in at work, and I can charge at home, but the infrastructure's coming. It's coming rapidly. More and more entries into the market as fuel companies become energy companies, not petrol companies anymore, and start putting chargers into fuel stations, or having bespoke charging stations, as we're seeing. We've got one opposite our Nissan business in Cribbs Causeway, a supercharger hub, which is great. Charge a car in 18 minutes from 10% to 80% is cup of coffee time, and I think that market is exciting. I think it's exciting when you see the number of products that are coming from every manufacturer, forced by a government change. I think it requires more legislation in terms of new build houses, and the private sector has a lot to answer for and a lot to contribute. All offices should have EV charging points. It would attract staff to the business. And it would reduce the demand on the infrastructure. Houses should all have chargers when they're built, and an infrastructure. And then you've got lamppost technology that's coming through. So infrastructure always follows technology, and I think what we're seeing is those two components hand in hand now, growing at an exponential rate. Very exciting to be part of that with the brands we represent. Got to say that it's whilst it's been forced on us, it was much needed. Still lots of questions to be asked, battery technology and battery manufacturing and raw materials. But I think it's a winner at the moment. Hydrogen is obviously in the background, but lots to do on transportation and storage and logistics of that particular product. Hydrogen probably looks like it's more suited for heavy goods vehicles and long distance transportation, certainly overseas in other countries, but certainly here. But electric vehicle technology, the message has got to be to customers: come in, drive them, drive it for a couple of days, see if you get on with it. And I'd be surprised how many people wouldn't opt for EV. Mind you, there's a lot of product between a diesel car and an EV. You know, there's very efficient petrol cars, there's mild hybrids, there's plug-in hybrids, you know, and there's any number of derivative of those models. So we try and educate that there is not just one choice. It's not just diesel or battery, that there's a lot of other technologies in between for the next certainly 8 years as we phase out of petrol sales. But 34 million used cars are floating around out there that aren't battery at the moment, so there's still going to be an awful big market out there for ICE vehicles.
The battery, or rather the EV products, Martin, it's something that we've looked extensively at Aston Barclay, isn't it? Just, not only to make sure that we can remarket that, but also we've got the infrastructure to process those vehicles. You want to speak a little bit about what we've been up to?
Yeah, and I think it's interesting. We're obviously watching how that dynamic's going to change, because I think this year alone, a lot of our leasing company customers, their sort of registration numbers have been extraordinary in terms of, I think something like 67% of all new cars registered were battery electric. So when you look at our mix now, and obviously we're selling stuff that's maybe from sort of 15 years old right through to 6 months old, there's a great cross-section. So overall, the average EV or even hybrid is still a very small percentage, but that mix is changing very, very quickly. So yeah, we've want to keep an eye on it, and I think a couple of points Chris has made there. I think we've made sure all of our staff are becoming more and more educated as well. We've had a big training program about product because I think that was quite a stumbling block. So we're helping our dealer customers as well to start to move into, certainly used car retailers, to be able to move into the knowledge of EV and hybrid, because there's just that sort of tendency to stick with what you've always done and convert a customers into an ICE vehicle, when actually, as you've said, Chris, actually we should be doing the other way and getting them into hybrid and EV or the variations of. But yeah, we're seeing two very particular markets. So yes, as a business, we're going to invest heavily in upgrading all of our charging capabilities, both operationally and for our customer base, and those are developing quite well. I mean, we obviously invested some years ago already into chargers so that we were able to facilitate those vehicles when they came in, and when they were very limited in terms of their capability at the time. But yeah, we've been looking again. We'll be investing this year heavily, and probably again next year as well. But the type of chargers you can get now, where you're able to change the kilowatt hour output, etc., have moved on tremendously from where we started. But from a market perspective, there are, I think there's a few more things to go on. So we've got, I think, two different markets in that alternative fuel situation. As Chris said, Leafs have been around for 12 years now, and actually a lot of the hybrid vehicles like the Auris and Leaf, etc., and Zoes and so on, the average age for them is actually very similar to our normal fleet profile. So it's sort of 41 months old. It's kind of 30-odd thousand miles, and its average selling price, I think at last count, was around that sort of 15,000 wholesale mark. So actually that's become, because it's been in the market for a long time, it's value for money, it's sitting at the right age profile, etc. Whereas EVs, because they're relatively new to the market, they're a totally different profile. They're sort of 13 months old, maybe less than 10,000 miles, and their average sale price for us in wholesale is well into the high 20s. So there are two different sort of markets, and that will change. As we know, ICE engines will be out by 2030, and then I think even hybrid then has to stop at 2035. So yeah, I think the mix and dynamic change over the next 3 to 5 years is actually going to be outstanding. But I'm like Chris, I'm pleased to see that appetite, even in the last 18 months, I mean, went through a period back end of 20 where hybrid values were dipping away and there didn't seem to be as much interest in them, and throughout 2021 that's completely turned around. And I was going to ask Chris about that consumer, because it seems to me that often the consumer retail journey often works very similar to that of which the business goes through. So as we saw, early adoption by businesses in hybrid product, now everybody's converting to the battery electric vehicle as the amount of models available are improving and the range is improving. And I I don't know, but that would suggest to me that maybe there's a lot more consumers that are almost very ready to go into a hybrid vehicle, maybe not quite so ready to make the full step to battery electric, but I think that's going to change very quickly because the market's moving so fast. So I was going to ask Chris if that's how he sees that with the consumer appetite.
I totally agree with you. The one of the interesting step changes has been range anxiety, and of course two things have happened. One, batteries are becoming more and more efficient, and when and if we get solid state batteries, that will be another game changer. But with the existing technology, range is already over 300 miles, and of course people are doing a lot less miles now. Over the last 2 years, people's lifestyles, working patterns, working from home has reduced significantly, and we're talking to fleet customers who wouldn't have normally thought of EVs and full battery EVs, not plug-ins or hybrids, who are now saying, well, actually my drivers are saying we don't need to do the same amount of miles as we did before, and we can live with battery technology. Obvious tax advantages for any company car driver in a BEV, which helps. And the other thing is the knowledge that customers have of the product, of the technology that goes into it, is rapidly changing. And when they come in to buy an EV, they are very, very educated, very knowledgeable on the product. Sometimes, I hate to say it, more than we are. And certainly that helps them make decisions. We were taking orders for EV6 and Ioniq 5 before those cars were even seen in the showroom, and before they even test drove it. And most people that had an EV6 or an Ioniq 5 in the early days, first time they drove it was when they picked that car up from the showroom. But their knowledge, the information they got that was available online, was everything they needed to know. And that's a 50, 55, 60,000 pound purchase that you didn't know you were going to like until the day you drove it away. And unfortunately, the product is good enough that it's not caused us any problems. But it does show you that those customers, those transactions have changed dramatically. So for the right product in the right segment at the right time, people will buy readily. They weren't buying it online; they were still buying it from the dealer, and they were still wanting to ask us questions and find out when their car was coming, and still talk to us about it, because there's a level of enthusiasm around those products that aren't perhaps around a traditional ICE vehicle. And those people are very vocal online and in various forums, and they're great advocates for the various brands and the various products. But certainly, I can see the time when Aston Barclay are having EV only sales or hybrid sales or whatever it will be, and you'll have enough supply. Be interested to see the take up of the customer base that's maybe non-main dealer, that, as you said, isn't used to dealing with EV technology, what their take up will be if they're reticent or not. At the minute, I think it's a main dealer arena, and I'm glad to say it, because we've got great products, and we'll take every EV we can get as a used vehicle, because we love them and we can sell them, and those brands are great.
Yeah, we have literally started that. I know we did late last year, didn't we? Have corralling all of our EV product into a singular sale, and that will just keep growing and growing now, won't it, as time goes on. And I think, we've seen the used retailers, the ones that are obviously early adopters again, are those that are maybe working out of London because there's a much bigger demand, although that is now spreading. So, I think certainly here out in the southwest, with all the noise about Bristol going into clean air zones, is definitely happening. And funny enough, I think one of our biggest EV buyers is right out in the Orkney Isles or somewhere. Yep. So, it's amazing how people adopt them. But yes, it's going to be a changing marketplace. It's going to be very interesting to watch and see how that unveils over the coming years.
One thing we wanted to do with this podcast is to invite each of our guests to find a news story from the past week or so that they found interesting and relevant. So I wondered, Chris, have you seen anything in the news recently that you wanted to talk through?
Yeah, touched on it earlier. Really, I guess the two big stories are one which keeps growing, which is the acquisition of Marshall, and the other one is the other disruptor, which we spoke about earlier, which is the Kazoo sale of LeasePlan. I think £4.1 billion. I think to create. I think it's called New ALD, isn't it? Which is the new branding, which I think is a phenomenally strong brand, to be honest with you, to have in the marketplace. And I just wonder what that will do to the subscription model, if that's the route that they're looking to go down, and how that's going to manifest itself. So how much ALD becomes a retailer in its own right, almost. But yeah, I was surprised at that, because I just couldn't help thinking that LeasePlan would be a provider of stock for Constellation. Yes. I just thought that was a real kind of a odd one for me. I didn't quite understand it. It was almost missed in some of the news. It didn't really make it as a headline. I think it was more the more sensational headline was the Marshall acquisition, which I think was an incredibly a bullish, gutsy move. Not without its conflicts, I think, in there. It does raise the question of manufacturers now dealing with a disruptor directly. So I wonder what model they've got that further down the line on that, because Marshall's are ultimately such a successful company. They're successful for a reason. Their leadership and management team. The way they've been driven forward. I thought the Motorline acquisition was a great one that was kept very quiet and until the deal was done, and I thought that was strong enough. But then to see the Constellation move was even more surprising. I think everyone was surprised at that, to be honest.
Yeah, and I think there's probably a bit more news to come with the ALD LeasePlan, because like you, Chris, I found that very surprising, because everything's about sourcing cars over the next sort of 12 to 18 months for all the reasons we've said with new car supply. So maybe there's some more news under that story in terms of how that's all going to be pulled together. And it seems that obviously with both of those organisations being very strong in Europe as well, and I do think the subscription model seems to be adopted more through the European countries maybe than it does in the UK. So it creates a huge organisation now, doesn't it? So again, it'd be interesting to watch what happens with that over the coming months ahead.
Agreed. Martin?
Well, for me, I mean, I don't know whether I've got a specific news story, but I think it's really interesting that there does seem to be an awful lot of moving and shaking in the industry. So I think for me, that's the biggest thing is, we've just said that actually as an industry, it's been is very mature, but also very entrepreneurial. And the amount of change that happens within this industry, I'm really quite proud of how everybody changes and adapts their business models. And I think the automotive industry should be quite proud about how we do that. But I also think that it's only just the beginning, in as much as there seems to be an awful lot of money about in the city at the moment, with lots of acquisitions and growth plans going on. And I think there'll be a lot more of these types of conversations about acquisitions for growth and or change for sort of challenging for various different customer bases and or products offering. Acquisition seems to be a great way to obtain that very quickly and gain that share. So, yeah, I think there's lots gone on in the last 12 to 18 months in our industry. Most of it for the good, because I think all of that change creates opportunity, and that's been really good. And I also think what it does do is it allows people to offer great service by starting to specialise in one particular arena as well, whereas sometimes you get to a point where businesses through growth try and become sort of jack of all trades, master of none, and actually their value comes back to being able to specialise in a particular sector, which certainly Aston Barclay are hoping to do. We're not about to enter that retail world, and we do feel that concentrating on helping our customers to both source stock well for them to make profit and also remarket their stock to keep their profits high on their trading values is important. And that's certainly helped us in the last 6 months. Our new business wins have been astronomical. But I think generally in the whole industry, because of what's changing, people are starting to concentrate on experts in, I've seen it, we said about transport. People are starting to real hone down on, I need to get a good transport supplier that's going to be reliable and I can fix my costs on. And, there's so many different areas that actually that concentration on speciality is maybe something that's going to happen a bit more over the next 12 to 18 months as well, I think.
Thanks to Martin and Chris for joining me here in Bristol, and thanks to you, the listener, for giving this podcast your time. You can follow us on Facebook at Vehicle Remarketing or on LinkedIn at Aston Barclay Group. To get in touch, it's on email at podcast@astonbarclay.net. If you don't currently have an account, just visit astonbarclay.net, where you can inquire about both buying and selling through Aston Barclay. I've been Ben Crawford, and you've been listening to the Aston Barclay podcast. See you next time.